There is a man who is about to take one of the most powerful jobs in the world when it comes to your money. His name is Kevin Warsh, and there is a good chance you've never heard of him. But here's why this matters to you directly. The person who runs the Federal Reserve decides whether interest rates go up or down, and interest rates affect everything. Jerome Powell has been running the Fed for years. His time, it's up, and Kevin Warsh is the man nominated to replace him. Now, this is not a small change. This is like a new coach taking over a team that affects every player on the field, and you're one of those players, whether you realize it or not. So in this video, I'm gonna break down who Kevin Warsh actually is, what he has done, what he believes, and what experts think his leadership is going to mean for your money. And before we get into it, nothing in this video is financial advice. This is purely educational. We're breaking down who this person is and what his appointment could mean for markets. Also, always do your own research before making any financial decisions. I'm Alex, aka your money friend. With that said, let's get into it. Why this change actually affects you personally. The Federal Reserve makes decisions that directly affect how much your mortgage costs every single month, how much interest you earn on your savings. Yeah, the money in your bank account that you think nobody can touch, this affects that. Whether the stock market goes up or down, whether it gets easier or harder to find a job, this affects that. And right now, something significant is happening. The person in charge of all of that is changing. Jerome Powell has been running the Federal Reserve for years. He is the one who has been holding rates steady while the economy figures itself out. Love him or hate him, you knew what you were getting into with Powell. Kevin Warsh is a completely different person with a completely different background and a completely different philosophy about how the Fed should operate. Who is Kevin Warsh? Kevin Maxwell Warsh. He was born on April 13th, 1970 in Albany, New York. He grew up in a small town just outside of Albany called Loudonville. For college, he went to Stanford University, one of the most prestigious schools in the country, where he graduated with honors in 1992. He then went to Harvard Law School, graduating in 1995. After law school, he went straight to Wall Street. He joined Morgan Stanley, one of the biggest investment banks in the world. And so an investment bank is basically a company that helps businesses raise money, buy other companies, and navigate complex financial deals. He spent 7 years there, rising to a senior level position. Then in 2002, he left Wall Street and went to Washington, D.C. He joined the Bush White House as a special assistant for economic policy. He worked directly with the team that advises the president on economic decisions. He also served on a group called the President's Working Group on Financial Markets, whose job is to coordinate a response when the financial markets are in serious trouble, the moment that defined him in 2008. So in 2006, President Bush appointed Kevin Warsh to the Federal Reserve Board of Governors. He was 35 years old. That made him the youngest person ever appointed to that position in the entire history of the Federal Reserve. 2 years later, the 2008 financial crisis hit, the worst economic collapse since the Great Depression. And Kevin Warsh was right in the middle of it. He was a part of the core group of Fed officials who managed the crisis response. Here is what that actually looked like. When Bear Stearns, one of the biggest banks on Wall Street, was about to collapse in March 2008, Warsh helped put together an emergency deal over a single weekend to sell it to JP Morgan Chase. That deal prevented what could have been a catastrophic chain reaction across the financial system. When the Lehman Brothers collapsed in September 2008, the event that triggered the worst of the crisis, Warsh was involved in managing that fallout. When AIG, a massive insurance company, needed an emergency bailout to prevent an even bigger disaster, Warsh was in the room helping make those decisions. This is not someone who read about financial crisis in a textbook. He was one of the people making real decisions in real time during one of the scariest economic moments in modern history. He served as Fed governor until 2011. After leaving, he joined the Hoover Institution at Stanford as a researcher and has been writing and speaking about economic policy ever since. Also, really quickly, guys, let me know what kind of videos you want to see next. Drop it in the comments below. Why was he nominated? In January 2026, President Trump nominated Kevin Kevin Warsh to replace Jerome Powell as chair of the Federal Reserve. His Senate confirmation hearing happened on April 21st, 2026. That is where the senators got to ask him questions publicly before voting on whether to confirm him. At the hearing, Warsh made a few key promises. He pledged that the Federal Reserve would remain independent, meaning it would make decisions based on economics, not based on what politicians want. He said the president had never told him what to do with interest rates, and he outlined his vision for how he would run the Fed differently from Powell. As of May 2026, the confirmation vote has not happened yet. One Republican senator blocked it temporarily while waiting for a separate investigation to result, but most analysts expect him to be confirmed. What does Kevin Warsh actually believe? He wants interest rates to come down. Warsh has argued that interest rates are currently too high. He believes that new technology, especially artificial intelligence, is making businesses more productive and efficient. And when businesses are more productive, they can keep prices stable even with lower interest rates. So he thinks the Fed can afford to lower rates without causing inflation to spiral out of control. He wants the Fed to own less stuff. The Federal Reserve currently owns over $7 trillion worth of bonds and other financial assets. It bought all of those over the years to help support the economy during crises. Warsh thinks that the Fed could sell a lot of these off and get back to basics, but here's the catch. When the Fed sells off those assets, it can actually push certain interest rates higher, specifically the rates that affect mortgages and long-term loans. So you could end up in a situation where the Fed cuts its main rate, but your mortgage rate does not come down as much as you'd hope. That is the nuance worth knowing. He wants fewer press conferences, less advance signaling, more action and less talk. And for investors, that means more surprises around Fed meeting days. Markets might move more sharply when decisions are announced because there will be less warning in advance. He says he will keep the Fed independent at his confirmation hearing. Warsh was very clear that he would not let political pressure influence Fed decisions. He said the president had never directed him on rates. Now, whether you believe that is up to you, but it is what he said publicly and on record. What experts are saying. JP Morgan analysts think Kevin Warsh would probably be careful with the interest rates if he became Fed chair. They don't think he would quickly cut rates just because the White House wants him to. If inflation stays high, they believe he would likely wait and make sure prices are under control first. Invesco, a major global investment firm that manages money for millions of people, suggests that Warsh is likely to be more flexible and market-friendly than people expect. They think he will focus supporting economic growth and that his leadership could be positive for stocks over the medium term. Fortune magazine and analysts on Wall Street broadly agree that Warsh's approach of giving less advanced warning about Fed decisions could create more short-term volatility. Volatility just means bigger and faster price swings. When the Fed stops telegraphing its moves in advance, markets have to react to actual decisions rather than anticipating them. That means bigger moves on the days when the Fed announces its decisions. The University of Virginia's Darden School of Business suggests that when Kevin Warsh were appointed to lead the Fed, it can represent a real regimen change, moving the central bank away from the academic economics model that has shaped it for decades and toward a more market-oriented approach. That kind of shift could influence Fed policy for years. The overall expert view is this: Warsh is experienced, credible, and not going to be a pushover, but he is going to run the Fed differently from Powell. Expect a different communication style, potentially lower rates over time, and more market movement around Fed announcement days. What this means for your money. Let me make this personal. What does Kevin Warsh becoming Fed chairman actually mean for you? If you have a mortgage or want to buy a home, Warsh wants lower short-term rates. If he gets his way over time, mortgage rates could come down, but his plan to shrink the Fed's holdings could keep some long-term rates elevated. The honest answer is that the impact on mortgage rates is uncertain, but the direction he wants to go is toward making borrowing cheaper. If you have money in a savings account, high interest rates have been great for savers recently. High yield savings accounts have been paying 3 to 4% interest. If Warsh cuts rates over time, those returns will gradually come down. If you are earning good interest on your savings right now, that may not last forever. If you invest in stocks, lower rates are generally good for stocks. Cheaper borrowing means companies can invest more, hire more, and grow faster. That tends to push stock prices higher over time, but the potential for more surprise moves around Fed announcements could create choppier markets in the short term. So if you invest in crypto, Bitcoin, and other cryptocurrencies tend to do well when interest rates are falling and money is flowing more freely through the economy. If Warsh does cut rates over time, that could be a positive for crypto, but the uncertainty around this confirmation and his exact policies is creating volatility right now. What smart savers are doing. The Bitcoin Fear and Greed Index, which measures how confident or scared crypto investors are feeling, is sitting at a pretty low level right now. That tells you a lot of people are nervous. They're not rushing to put money into risky assets. They're being cautious, and honestly, that is not a bad instinct in a moment like this. When there is uncertainty about who is running the Fed, what direction interest rates are going, and how markets are going to react, one of the smartest things you can do is make sure the money you already have is working as hard as possible for you while you wait for things to become clearer. That is where a high yield savings account comes in. SoFi, which is one of the platforms we have used and recommended on this channel, is currently paying 3.3% APY on savings when you have direct deposit set up. That same $10,000 earns you $330 a year just for keeping your money in a smarter place. SoFi also has no monthly fees, no minimum balance, and a current bonus offer for new customers. If your direct deposits total $5,000 or more, you earn a $400 cash bonus just for signing up. The link is in the description down below. It is an affiliate link, which means we earn a small commission if you sign up through it at no extra cost to you, and lets us keep making free content like this. If this video helped you out, hit the like button and subscribe. We post new videos every week here on Your Money Friend, covering investing, money, and everything in between in a way that actually makes sense. So tell us what you want to hear from the next one, but that's it from me, Alex, aka Your Money Friend. I'll see you in the next one. Peace.